Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 18th of September. It's been a pretty chipper end to the week on a number of fronts, with global markets showing some strength. Certainly in terms of the US, a whole slew of economic data has continued to point towards the Goldilocks scenario, the perfect economic soft land which the Federal Reserve has been trying to engineer for some months now. At the same time, there's been something of an uptick in fortunes in China. It's hoped that the accumulating stimulative measures which the Chinese authority have been taking may have started something of a fragile recovery. There's still problems around the property market, but there were some Chinese retail sales numbers which actually surprised on the upside. So those things, alongside the fact that we may now be reaching the peak of interest rate hikes around the world, is something that investors have taken to heart. So in the year to date, the Dow Jones is currently up by 5%, S&P 500 is up by 17%, the Nasdaq is up by 33%, and the FTSE 100 has moved comfortably back into positive territory, up some 3.9% in the year to date. Looking forward to next week, there's a raft of numbers coming from the retailers in particular, which is always of interest, of course, given the current state of the UK economy and consumer propensity to spend. First off, we've got a half-year update from Kingfisher. For all of these retailers, there's a rather different 1 year and 2 year view. Kingfisher, for example, shares down 5% over the last year, but down 36% over the last 2 years. This is obviously the company which houses B&Q, which is where we'll see some of that consumer demand and how it's going. Screwfix, which has tended to be something of a jewel in the crown for the company. So any sort of progress since the pre-pandemic after the company's transformation is something to keep an eye out for, as indeed is its current net debt position. Also, half-year numbers from Next. They've had a good year, up 23% over the last 12 months, but again, on a 2 year view, the shares remain down by 11%. They have, however, already had several upgrades to their full year profit forecast this year, which has helped to lift the shares. Again, look out for their full price sales and whether they're continuing to rise. The online presence which Next has always been something of a boost to them this century, and the return to city centre shopping also helping them along as well. Again, bear in mind any potential consumer pressure. Third quarter numbers from Ocado. Split into two parts. This is a share which has perennially been something of a jam tomorrow stock. That's based on its Ocado Smart platform, the robotic arm, which remains leading edge, but the market has been somewhat disappointed by the lack of overseas growth. So that's something we'll be keeping an eye out for there. The other half of the business, of course, is the joint venture with Marks and Spencer, which inevitably has been coming under a little bit of pressure, although recent numbers from Marks could provide something of an uptick. Shares of Ocado, well, again, up 21% over the last year, but over the last 2 years, down almost 60%, and that's reflective of the disappointment investors have been having. Rounding off the retailers, there's half-year numbers expected from JD Sports, and in terms of FTSE 100 companies, there are also half-year numbers from the insurer M&G. Thank you for watching. Have a great week.